All right. Good morning. It is Monday, February the 5th, 2024. We hope you had a nice weekend. Rainy here, rainy Monday morning here in Charleston. I got a haircut, which I feel I always like the haircuts. It starts to kind of tickle my collar in the back, and when it gets a little too long, it's time. It's a nice start to a week with a little haircut. We hope you had a nice weekend. My dad was in town last week, which was nice for him to spend some time with my kids, and always fun. Just a nice, relaxing weekend. Okay, first little bullet point I have on my list today. We will be sending out the spring review invitation, like scheduling link via email. All right, so I know Patrick's just finalizing that right now. We're going to get that emailed out today. So just give that a click and find a date and time that might work for you. In the coming weeks, and we look forward to seeing all of you. So 3 weeks from today, we start reviews, which is really exciting. Just a reminder there. If you could please just let us know if there's something you'd like to add to the agenda, just so when we're preparing for each review, we can spend the necessary time preparing for each of those questions and things you'd like to discuss. So that'd be great. While I mentioned the scheduling link is going out, if you would prefer to speak with a human on the phone and schedule instead, that is also an option. Again, Patrick is just putting the link together. He's gonna give that to Denise up front, so she'll have that link as well if you want to call in and pick a time that way as well. That works for us. Last week, markets, equity markets, that is, a touch higher, fixed income lower, right? As yields went up. So to begin with, we had the Fed meeting. So Wednesday, as expected, no interest rate cut, which is widely expected. But what was interesting is some of the commentary was much more hawkish, right? And so you saw interest rates kind of climb a little bit on that. It's like, that's kind of strange. And then we have the January jobs report on Friday, which came out much stronger than expected. All right, so estimate was for 185,000 new jobs. The actual number came in at 353,000 new jobs. Okay, so just any chance of a rate cut for March, really out the door for the most part. And it makes me wonder if maybe the Fed was privy to that number in their meeting, just given the hawkishness of just their tone. Makes me think that they probably knew that number was going to come in hot, and I don't know. I'm just speculating, but stronger than expected jobs report, which so you saw interest rates across the curve increase. You saw the 2-year Treasury and the 30 invert again. So we'll see. Obviously the concern from the Fed's perspective, when you have a jobs number that's strong and you have hourly earnings increase the way they did, that could add to inflationary pressures, which is why really the way they spelled it out, the market is expecting 3 maybe 4 rate cuts, and they maybe not. We might need to keep the cost of capital higher, so we don't have inflationary problems again. So, and by the way, I would fall in that camp. I would much rather have borrowing costs be higher and maybe a little bit of pain, temporary pain in markets, in exchange for making sure we don't have that mess again. So like, I would agree with the Fed in that perspective. Like, I don't think we need lower interest rates today. Let's tackle inflation. Let's keep that down, and when the time's right, let's start cutting rates, and mortgages and car loans and all that become more affordable. So we hope you have a nice week. Again, really looking forward to starting reviews here in the weeks ahead, and we'll talk to you soon. Thanks.